Hi everybody, this is Gary Dean with Sentiment Timing, and this is our market timing video report for Wednesday, October 24th, 2018. I wasn't sure if I was going to be able to get any more videos out tonight, but being the market got absolutely slaughtered today, I figured I owed it to get one out. So let's just do some recapping before we get into things here. When we were topping, what we were looking at, we had time that was not on the bull side. We had sentiment that was pegging extreme sentiment readings, and we had technicals that were all warning of the top. And the reason why I'm going over this is because everybody was bullish at the exact wrong time. They were looking for the market to head up to 3,000. Nobody was worrying about down. And now we're getting the exact opposite. We're getting nobody's thinking this market's ever going to go up. So the reasons why we were looking lower, we had a divergence in sentiment here. We had a divergence on the internals. This is the amount of stocks that were above the 50-day moving average. We had the summation index. We had a divergence here, as well as the NIAID. So what I want to do is show you where we are now. So this was the divergence. You can see that we have sentiment that's even going to probably be lower than this after today. Sentiment is down at bottoms. Here, if we take a look at the NIAID, it's pretty low right here. It's gotten absolutely clobbered from there. Take a look at the summation index. This is the lowest it's been in over 2 years. And if we take a look at the stock's 50-day moving average, you can see these are at levels. So now everybody's getting extremely bearish, and it's we know things are going to be sloppy, and that was kind of anticipated going into this. We were really looking for this week to kind of be bull friendly. That got erased today, because really what we were looking at after the bounce that we got was there's a possibility that we were going to continue and make an ABC. But one thing that was relayed is that we are in a very, very sloppy time, because if we go back to our predictive analytic model, sentiment we know is going to be in the bearish levels, extreme bearish sentiment. Technicals, we have reasons to look for a bottom, but time-wise is now out of whack. And this is when we talk about when things are sloppy, is when we don't have all of our everything is aligned in our model. When it is like we were at the top, where we had time, we had sentiment, and we had technicals that were all looking lower, and this is what happened. Now, when we have everything that's lining up for a low, like let's take a look here. This was a low date that Woody was looking for. And he actually put this out in December, that this was going to be the low date. And we have bullish divergences, we had time period, and we had sentiment, and from there we had a massive rally. So this was, this was lined up. Now this wasn't lined up until yesterday, because if you remember, we didn't have any bullish divergences. So as this rally was going here, we did have time that was on the bull side. We did have an extreme bearish reading here. We had a 0% reading that did cause the low, but we didn't have the technicals in line, so it's always been left open that we could make this move. And that's what I mean by where things are sloppy, where everything isn't lined up. So now we do have some bullish divergences. We're at some support. If we got a bounce, that would, it would make sense. If the bears need to push lower, then we're probably looking at a move that could take the S&P down to the 2615. But we know that we're running into a time period where there's supposed to be where the market's not going to be bull friendly. So what we may get on that, it doesn't mean that we have to go down. We could chop around. And what's going to happen if we just stay in these levels here, just chopping around, because we're not expecting a huge breakout? When that time comes, which we already have the low date that we're looking for, that's when I believe it's going to be a face-ripping rally that's going to close the 2860 as well as the 2920 gap. So being we have some turn dates that are clustered together, I wouldn't be surprised to see kind of some ping-ponging going on down here until we get to the low date that's coming, and that's always been the time period that we're expecting the big rally. So we know the time-wise, things are getting a little tricky. We've always been saying that when the next low date comes, that is going to be the time where we believe it's going to catch all the bears on the wrong side, all the bulls that jumped out because they didn't think the market was going to go up. And from there, we continue up and they squeeze them up into the closing some of these gaps. And guess what? Everybody that's bearish is down here. Guess when they're going to get bullish? They're going to get bullish all the way up here. And most likely it's going to be running into our next top date. And when that happens, everybody's going to be bulled up. We're probably going to get some divergences on the internals, and from there we'll have time, sentiment, and technicals that are now going to be looking for another move to the downside. So the good part about when we have volatility like we have right now is that you get these big moves up and down, and as long as you know when to expect these markets to reverse, and as long as you have sentiment that's on your side, you just have to really look at the technical analysis and see where things are going to bottom and or top, either one. And that's you know, right now these moves are going to be big. It happens when we have volatility, and volatility is something that's been missing from this market all the way since 2009. And this is just a bigger picture. It just really confirming that for the next few years we're probably going to have high volatility, is because this could be a very, very long-term top. Not long-term. I mean, Woody is looking for a low, an actual trading low in 2022. So from there, it's 3 years away. But that is just a long-term view. You don't trade off of that. So during that time period, this is our wave 3 from down here. So the wave 4, we can be looking at 2407, 2074, or even as low as 1800, and it's still going to be in a bull market. This is going to be your wave 4 with a wave 5 to follow. But the reason why I'm showing you this is because when we have volatility, what happens is you get these big moves up and down, and there's a lot of money to be made on it, and that's really what we're looking for. So right now we're looking for this 5th wave to complete. It may actually give us a couple false bottoms on it, because there's, you know, like I said, we have some cluster dates that are approaching. One is actually when it's not going to be bull friendly, and the other one is when we're expecting the ultimate low to hit. And from there, that's when we're looking for that face ripping, short covering rally that's going to be most likely going to be closing some of these gaps. But we want to just manage things. You have to be patient with this. For short-term traders, I mean, if the bears continue lower, 26.36, and then, you know, we're looking down at the 26.13, and there's a chance that they could come all the way down here. We have to kind of wait and see how things play out on that. That's really not our concern. My concern is when the next low is going to be hitting, where it's going to be hitting. We already know the time period, and in looking where to buy, because I think there's going to be a real lot of points on the upside. We made the easy money on the downside. This is hard money, even though it seemed easy today if you were short. But what happens is you just get these big moves back and forth. This is the easy money. This is where we were short. We covered right here. From there, you got to bounce, and right now we're back down, and I'm expecting things to get choppy to scrape out a bottom as we head into that next low date. And from there, I'm anticipating that we're going to have a massive rally. So we have the bullish divergences on the 60-minute chart. We have some support levels below. Really, the bulls are going to have to get it above the 27.57 to get out of this little jam right here. But more importantly, they're going to have to break these highs to really get any bulls jumping back on board after what just happened here. Bears, if they take this lower, then don't be surprised to see a move down to the 26.15. I do anticipate that we're going to see some bullish divergences in place. I do believe that sentiment is going to be at extremes, and it's going to be coming right into the time period that we're looking for a low. And each time that has happened, we have just seen some massive rallies, and I don't believe that's going to be anything different right now, though. Just let this low play out, and you know, once that date is coming where things are going to turn bullish, then we start looking for the real low. Even though we may get a big rally tomorrow, it would make sense, especially to members that know when these turn dates are coming. But you know, to be patient, because the real low that's coming is going to be where the real money is made on the upside. So with that, have a great night, and I'll talk to you guys at our next report.